Today we're diving into one of the wildest, most fascinating bets in modern corporate history. It's about a software company that decided to go all in, and I mean all in, on Bitcoin. This is the story of Strategy's great crypto gamble. So let's just start with a number that's kind of hard to wrap your head around, honestly. In a single quarter, one company reported a paper loss on its Bitcoin of $17.44 billion. Yeah, billion with a B. So what does that even mean? Well, that's the size of the unrealized loss that Strategy reported. Think of it this way. It's not cash they've actually lost, right? It's just a reflection of how much the value of their crypto dropped on paper. Still, it's an absolutely staggering figure. It shows just how completely their fate is tied to the whims of the crypto market. Now, you'd think with a paper loss like that, investors would be running for the hills. And yet, that's not exactly what's happening. So the big question is, why is this company's stock still grabbing headlines? And a lot of the time in a good way. To get it, you really have to understand the core of their entire game plan. So let's break down this billion-dollar Bitcoin bet. You see, Strategy isn't just some software company that decided to dabble in crypto. No. They've reinvented themselves as what's known as a digital assets treasury, or a DAT company. This means their main job, their primary corporate purpose, is to buy and hold digital assets like Bitcoin. It's not a side hustle for them, it is the whole strategy. And the scale of this strategy is it's immense. The company holds over 673,000 Bitcoins. To put that in perspective for you, that makes them the largest corporate holder of Bitcoin on the entire planet. And you know what? It's not even close. And they are not slowing down, not at all. They just dropped another $116 million to snap up over 1,200 more Bitcoins. They just keep adding to the pile, which shows an incredible, powerful conviction in their long-term play. But hey, a bet this big is a total roller coaster. So first, let's look at the incredible highs, the good times. So check out this recent win. After a really crucial piece of news dropped, the company's stock shot up over 5% in after-hours trading. This just goes to show you how sensitive the market is to anything that seems to validate their big bag. So what was the big news? Well, the global index provider MSCI announced that companies like Strategy would remain in its indexes. Now, this was a huge deal. You see, a ton of big investment funds are actually required to hold stocks that are included in these major indexes. If Strategy had gotten kicked out, those funds would have been forced to sell, and that could have triggered a massive stock price collapse. So, huge sigh of relief there. And it's not just the index providers giving them a thumbs up. Some on Wall Street are still really bullish. The investment bank Benchmark just reaffirmed its buy rating, and they set a price target of $705. They're essentially betting that the company's laser focus on Bitcoin is the very thing that's going to make it a huge winner. And you know, for the early believers, the rewards have been absolutely massive. If you had put $1,000 into this company just 5 years ago, it would have ballooned to over $3,800 today. That's the kind of explosive growth that keeps investors glued to this story, no matter the risks. But, of course, with massive highs, you get some brutal lows. And this is what we're calling the volatility hangover. To say this stock is unstable is, well, a massive understatement. Just imagine this. In the last year alone, the stock made a move of more than 5% on 55 separate days. It's down nearly 50% this year, and right now, it's trading a staggering 64% below its peak. This isn't just investing. For a lot of people, this feels like riding a roller coaster in the middle of a thunderstorm. And just look at what an outlier it is. Over the past 6 months, while the broader finance sector actually grew by almost 8%, Strategy stock just plummeted, down over 58%. I mean, it is playing a completely different game than the rest of the market. Now, to be fair, the company isn't just blindly riding this wave. To build a financial buffer against crypto's wild swings, they've built up a massive US dollar reserve. Right now, it's sitting at $2.25 billion. That cash is there to cover their costs and create a safety net in a very, very unstable world. So, are they the only ones playing this high-stakes game? Let's take a quick look at how their competition is approaching the world of crypto. Okay, this comparison is really key. Strategy's model is simple. Treasury accumulation. They just buy Bitcoin and they hold it. That's it. But its main rivals? They have a totally different playbook. Companies like Mara and Riot focus on mining, actually creating new Bitcoin. And notice, they also hold way less Bitcoin.
And this is crucial. They're diversifying into other businesses like data centers. It's their way of building a buffer. Strategy, on the other hand, is a pure, unadulterated, all-in bet on accumulation.
So all of this brings us right back to this central question. Is this whole thing a genius move, or is it just a reckless gamble? It really boils down to this. On one hand, strategy offers one of the purest, most direct ways for investors to get massive exposure to Bitcoin, with the potential for just incredible rewards. But the flip side of that coin is a strategy that fully embraces extreme volatility and chains the company's entire fate to the unpredictable swings of a single digital asset. And that leaves us with the ultimate question. In the years to come, are we going to look back at strategy as a pioneer that wrote a brilliant new corporate playbook for the digital age? Or will it end up as a cautionary tale of what happens when you bet the entire house on digital gold? I guess only time will tell.